This is the 5-minute time frame of GBP/JPY. If we look at the indicator table for this time frame, you can see it says that the market is ranging. Looking at the chart, you can see it's indeed ranging as indicated. Here was another scenario. The indicator indicates that on the 1-hour time frame of GBP/JPY, the market is ranging. Looking at the chart, you can see it was indeed ranging. So if you were to use this indicator to trade, not only would it be helpful in identifying the trend of the market, but it would also tell you when to stay out of the market. In this video, I'm gonna go over what this indicator is, the best settings to use, and I'll even go the extra mile and showcase a super accurate pullback strategy that you can use with this indicator. If you happen to find value, remember to leave a like. Let's get into it. Now, to add this indicator to your chart, you want to go to TradingView and then open any trading security that you like in any time frame. For me, I'm going to be using the 5-minute time frame of GBP/JPY. After that, you want to click on Indicators and type in Smooth Gaussian Trend Filter, and it's going to be this one by AlgoAlpha. Ladies and gentlemen, this is the all-powerful Smooth Gaussian Trend Filter. It's a trend-following indicator that integrates Gaussian filtering with linear regression smoothing to enhance market trend visibility while at the same time reducing noise. This is what this indicator is made of. Now, in order to explore the components of this indicator, we first of all need to access its settings. On the Inputs tab, we want to activate these two disabled components, the mid-trend signals and the trailing bands. Right here, we need to change the table size to large. After that, click OK. The first component of this indicator is the Gaussian band, also known as the trend ribbon, which changes color between green for bullish trends and red for bearish trends. Now, during transitions between bullish and bearish trends, the indicator is going to print up and down arrows to mark these transitions. For example, as the market shifts from bearish to bullish, you're going to get a green upward arrow. Conversely, if the market shifts from bullish to bearish, you're going to get a red downward arrow. These arrows cannot be used as entry points for trades, but they can help you to see exactly where the trend of the market shifted. Now, you'll also notice that we have arrows in the middle of trends. These are called mid-trend signals. These signals appear within an active trend when the price pulls back to touch the Gaussian band. A green signal like this one suggests a buy opportunity within an uptrend. Conversely, a sell signal like this one suggests a selling opportunity within a downtrend. These can be used for trend continuation trades, especially when the price touches the Gaussian band and then resumes in the trend's direction. Looking at the Gaussian band closely, you'll notice that its color brightness varies over time due to a feature called volume intensity highlighting. Basically, the indicator changes the brightness of the trend ribbon based on market activity and volume. So when using this indicator to trade, instead of using separate volume indicators, this tool integrates volume data directly into the Gaussian band. Here's how it works. The stronger the volume, the brighter and more vivid the colors of the Gaussian band and the candles are gonna be. Conversely, when the market activity is low, the colors become darker and darker, reflecting weak market participation. In a bullish trend, you may want to consider taking trades when the band is not only green, but as bright green as possible, indicating increased market participation. Likewise, you may want to stay out of the market when the band is darker. The same concept applies for a bearish trend. Now, on the far right, we have the multi-time frame signals table, which displays trend signals for up to 5 different time frames as either bullish or bearish. These time frames can actually be adjusted in the settings by double-clicking on the table and then selecting your preferred values from the first time frame, the second time frame, all the way to the 5th time frame. This table helps traders align their trades across multiple time frames for stronger confirmations. Now, it's important to remember that if the market is ranging, which means it's neither bullish nor bearish, the table will say ranging, indicating a sideways market. This helps you avoid trading in unprofitable market conditions. Now, you may be thinking, but how does this indicator actually work? Well, here's a simple explanation. It first applies a Gaussian filter to price data, refining the trend line by smoothing fluctuations while at the same time preserving key movements. This is further enhanced with linear regression smoothing, allowing traders to fine-tune the trend's clarity. Now, to account for market activity, volume intensity is analyzed using a normalized Hall moving average, which adjusts the transparency of the trend line based on trading activity and volume. Finally, the indicator compares the smoothed trend with a super trend style level to detect trend direction and identify ranging markets, helping traders avoid false signals. Now, that may not seem like the simplest explanation, but what really matters is that this indicator actually works and is usable. Before we go over trade examples, let's take a look at the settings of it and see how customizable it can be. First of all, we have the Gaussian length with a default value of 15. This determines how much price data is used for the Gaussian smoothing process. A higher length results in a smoother trend line but may introduce more lag, while a lower value makes it more reactive. For me, I'm gonna change this to 150. Next, we have poles, which controls the smoothness of the Gaussian filter. Higher poles make the smoothing stronger, reducing noise, but also potentially delaying trend shifts. I'm not gonna change this value. And then we have the smoothing length with a default value of 22. I'm gonna change this to 30, which is gonna help refine the trend line even further. The flattened multiplier helps reduce smaller fluctuations within the trend, keeping the Gaussian band steady. A higher value will result in a flatter trend curve, making it more resistant to short-term volatility. And then we can enable or disable the table, change its size, and select the time frames that we want right here. For me, time frame 1 is gonna be 5 minutes, and then 15 minutes, 30 minutes, 1 hour, and 4 hours. And then here we have volume intensity highlighting. I'm not gonna be using this option, so I'll disable it. I'll keep the mid signals enabled, enable the trailing bands, disable the bar colors. On the style tab, I'm going to disable the bullish and bearish signals because I won't be needing them. After that, click OK. Now, to take a long position using a strategy I crafted around this indicator, the first condition is to ensure that the market's trend is bullish on at least 4 of these 5 timeframes. Right now, as you can see, the Gaussian band is green, which means the trend is bullish on the 5-minute timeframe, as indicated. It was also bullish on the 15-minute, the 30-minute, and the 4-hour timeframes. The 1-hour timeframe was ranging, but that's okay because the other timeframes remained bullish. Condition number 2 is to look for a pullback. You do this by waiting for the price to come all the way back and touch the Gaussian band without closing below it. It can touch the band with the wick, it can open inside of it, or it can even close inside of it, but it must not close under it. Here we can see that this bullish candle touched the band with the wick, giving us our pullback. Now, an important thing to remember is that we're looking for a candle pattern where there is one red candle followed by an engulfing green candle. An engulfing candle is basically a candle that's bigger than the previous candle. Right here, this green candle is bigger than the previous red candle, which makes it engulfing. This is the pattern you always want to have during the pullback. One red candle immediately followed by an engulfing green candle. It doesn't matter which of these 2 candles touches the trend ribbon during the pullback. The red candle can touch it, the green candle can touch it, or both. Once these conditions are met, you enter a long position. Place your stop loss under the most recent swing low, set your take profit at 1.5 times the risk, letting the trade run, and it was profitable. Now, here's another long example. This right here is the trade I want to show you, but this is the previous trade. In the previous setup, the candles came back and touched the ribbon. Now, in this setup, both candles touched the ribbon during the pullback. Now, I mentioned before having a candle pattern where one is red followed by an engulfing green candle. In the previous trade, the pattern looked like this, but for this trade, this is how it looks like. Also, looking at the table, the trend of the market was bullish on at least 4 of the 5 timeframes, confirming this entry. We enter a long position on the engulfing candle, place our stop loss right under the swing low, set your take profit at 1.5 times the risk, and as you can see, the trade was profitable. Here we have a short position. As you can see, all you need is to flip the conditions. We had a bearish trend across 4 of the 5 timeframes, which meets the minimum condition. Then the price pulled back, touching the ribbon by closing and opening inside of it. Now, with these 2 candles, the pattern we're looking for is a green candle followed by a red engulfing candle. We take a short position, set the stop loss above the swing high, take profit at 1.5 times the risk, letting the trade run, and it was profitable. In summary, the smooth Gaussian trend filter is a sophisticated technical indicator designed for clear trend identification and noise reduction. Its combination of Gaussian filtering, linear regression smoothing, and volume-based highlighting offers traders a powerful tool for market analysis. Go ahead and check it out on TradingView if you wanna use it alongside your strategy. That's been it for this video. I really hope you found some value. If you did, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.